Good morning, traders. It is Thursday, June the 20th. Taking a look at the charts, we've got the 30-minute trend analysis chart on the left-hand side going from red bars, meaning a technical downtrend, to orange, meaning neutral, and green. We are in a nice uptrend in gold, and it's really starting to pick up speed. Now, this is regular trading hours only when the majority of money is flowing into the asset class. Now, you can see here the daily chart on the right-hand side. And we've gotten some pretty wild volatility. These blue lines going across the chart are short-term resistance areas, and more or less the gold market really popping today. It's up almost 3% for gold, so a really big pop today. The big question is, where are we going to run into some resistance and sell off? You can see this blue line here. We've got close to it a couple times. We've seen some pretty strong sell-offs pulling it back intraday wise. Today the market is gapping above that, and then it's pushing up, and it's tagged this next resistance area, which it pushed through short-term intraday this morning. It's starting to move back down, so it's going to probably be stuck between here. Now overall, I wouldn't be surprised if we start to see the price start to stall out here. Now it's a tough price action that we've got here. What we've got is a running correction in the market. It's really tough to measure where they're going to go, but more or less, if we were to take a Fibonacci extension on here and try to figure out where price is going to go, we can take it from a few different areas. We could go from the start of the rally to this first pullback, or the first peak, and then this pullback here, carry that forward. That'll give us where our first key target is, around 1400. It's a whole number, so probably go below that, which it came right up underneath at 1398. Naturally, there's going to be resistance at a whole number, so usually the price will stall out just before that. So if you have a target just above a whole number, usually you want to try and squeak that target under. You're better to take a profit target a little short and get out in case price reverses back down. Now that's our first target. Now the other thing here is we've got a running correction, meaning the market didn't really flag out here with a three-wave correction. It didn't put in a type of bull flag formation for us to measure to the upside. Instead, it did a running correction, meaning it's rallied up, it did a quick little pullback, and then it rallied back up to a new high, another little pullback, another rally up, it pulled back, and then it's kind of releasing and really just running and going. So it's correcting as the average price is moving up. This volatility is what cleanses the market. It works like a bull flag forming, but it's correcting as it's running higher. So if we were to just throw a Fibonacci extension with some averages on there, we would go from the low, and instead of going from this high or that high, I kind of tend to go right in the middle. You get the best of both worlds for both peaks. And then instead of going from this low down here or that low there, I do the same. I kind of go in between because you don't know where to really go. And this gives you some upside targets for price. So overall, we're looking for price. It's already run to this first target. This is kind of the first key profit box, or first key target is going to start to run into resistance. We do have physical resistance from the chart way back in time over here, which I'll show you in a minute. And then we got the second box of potential profit target that if it can blast through this resistance area, we're going to see it continue to go up there. Now, if we take a look at the monthly chart, you can get an idea for where gold is here. You can see these resistance areas on the chart. Let me clear out a couple of these little Fibonacci lines. So you can see where we are. We got this massive multi-year basing formation. It's really starting to break out here today. We've gone from lower lows to higher lows. We now have more or less over here we had a significant standout high, and then we broke that with a higher high. So we've gone to a higher high, higher lows, and finally we're starting to break these other highs here as well. So now we're really starting to break out, and we're in this little box here of resistance, which there's a lot of resistance through this whole box actually going back in time. So it's going to be a tough area for it to try and clear through. And then we got this next area where we've had a lot of volume and price trading through there in the past. So there's still quite a bit of overhead resistance for it to really break free here. But overall, it's gone from a market top in the market to a downtrend, to a basing formation, to a nice rounding formation. More or less a multi-year base, a stage one accumulation, and it's getting close to potentially in some month here starting to break out and start to potentially have a big run and go back up and test these highs we saw in 2011, 2012. So let's take a look over at silver real quick, just so we can cover the top ones, top metals here. Overall, silver still making lower price action, still has lower lows. If we can break this previous high here, we'll have a higher low and a higher high. But at this point, silver's still out of favor, and the silver gold ratio. I posted an article on it about a month or so ago, but more or less the silver gold ratio is screaming, saying, silver is the asset more or less to be in. It's still in a downtrend, but longer term, it's silver is the one that should have the most to gain, and more or less it's in a downtrend. But the gold silver ratio is saying that gold and metals in general should be starting a bull market here, any quarter or any month. It's a long-term time frame, so it's not something that happens in 1 week. But silver's starting to show some life. Again, it's had a little pop, a fade back down, another little pop. In the grand scheme of things, silver is still under pressure and hasn't really started to break out yet. If we take a look over at gold miners uh, continuing to kind of hold in this major flag that we saw from back in 2016, this big run. If we go way back in time here, you can see where miners are in terms of a potential the stage one kind of basing formation right across this area. We've gone same as gold, lower lows to it had a nice strong move here, and now it's been flagging out of favor. But if it can get some traction here, we're probably going to see a pretty quick pop back up to the upper end of this range, and then eventually it'll break out of this full out into a bull market, and we could potentially see a big rally going forward. But again, where we are now at 31, I think it's actually going to open at 34 this morning. Overall, there's a lot of potential upside just to the upper end of this range again, and then a break from there will really be the big game changer for investors to pile in money, because that's when it'll be technically in a new full-fledged bull market. Breaking out of this pattern above this previous high will be shorter term, more aggressive traders getting in early, anticipating a move up to here, and those holding longer are anticipating obviously much larger gains. Now taking a look over at the dollar real quick, yesterday no rate change. We saw the dollar plummet yesterday, which helped send gold miners higher. Today it's plummeting again, and the big question here is, are we starting to break down from these lows? We had this channel, this rising channel with the odd hiccup here from Brexit, the upper end of this channel, and you can see here it's starting to break down. We've got this pretty significant resistance area on the chart, more so right across here, where it broke down, it tested, and now it's breaking down, and we could start to see this continue to sell off and come back down to around this 94, potentially 93 area going forward. As gold breaks down, metals are going to rally. So we'll see. The dollar now is going to be at short-term support today. Maybe it finds a bounce. Maybe it will hold its ground here for a while, and that'll put a little short-term top in gold and silver. Seems everyone's excited. Everyone's piling into gold and silver and miners today. Usually when everyone's piling in and the dollar's at support, we usually see a pullback. And our GDXJ position is actually set in pre-market. Let me just see where we are in pre-market. Pre-market, we're trading up near 34, which is our next target for this. We got in down over here, we took our first target, and now it's taking off with our second target to the upside. It's a big gap up, and it's right into resistance. So we'll probably have that order triggered, and we'll lock in the rest of the gains there. And then we'll be looking to potentially reload or on a pullback or correction. Usually when everyone's excited is when the market tops out, and we are coming right into a previous high where we saw a huge sell-off after this type of move. So this is still a news-based move, I feel, with the Fed, everybody's piling in, and usually what happens in moves within a couple days, what goes straight up, especially massive gaps, is usually given right back very quickly. So be prepared for a alert. 34 is our upside target. I mean, getting out at any point, it's at 33.90 in pre-market. So we're looking to close that out, and we'll re-enter on some type of pullback or consolidation when the downside risk is negated. This is a big stretch up here and could very easily pull back after this. Let's take a look over at energies real quick. Natural gas continuing to fizzle out of favor. Really not too excited about natural gas at this point. I'm more excited to get onto the long side in due time. But taking a look over at Crude up 4.5%. Today it's just doing that pop, breaking out of this little W bottom formation. Big pop today, and that is a breakout. So we might start to see this run all the way up to 57, 58. Overall, huge move today. It's too bad when these things make these giant moves in one day where it's just a big pop. You can't really get in during regular trading hours, but overall, it's breaking out, having a pop, and we'll see if it gets a little pause or pullback. Maybe it's an opportunity to get in. There's still potential for 58, potentially for it to work itself all the way back up to 60, which is a more significant resistance area on the chart. It's the moving averages. There's 59 area. It's the moving averages, this previous high, and this consolidation over here. Last but not least, let's pull up the indexes real quick. Stocks are moving up today, and we're seeing a nice pop in equities up about 1%. NASDAQ up 1.5%, and so we're starting to push up to, looks like, new highs on the SP 500, and more or less the market is getting a little overextended. It is in a strong uptrend. We're looking for some type of pause or pullback to potentially get long in due time. Anyways, that's it for this morning. Talk to you in a bit. Bye-bye.